Welcome back to the program. Let's turn to some good and some not so good numbers just released by Egypt's main statistics body. It's called the Central Agency for Public Mobilization and Statistics. It's a lot easier to just call it CAPMAS. Trade deficits for the country down 56% in February to about $2.1 or so billion compared to $4.7 billion last year. Inflation, obviously, still relatively high, above 30%. But the body notes that this actually dropped by a marginal figure, 1.8% last month. Egypt reports that over $45 billion has been deposited in her bank since the devaluation of the pound in early November. That marks the best performance in about 10 years. At the same time, the central bank is holding about $27 billion worth of reserves. It's a marked improvement from the $10 billion it had in 2015. And right now, at current levels, it covers at least 6 months of Egypt's basic needs. Tourism revenue up 50% as well compared to last year. Let's dig a little deeper into the details of these numbers. Yasser Kim joins me now live from Cairo. Yasser, there are a lot of things that were covered, among them, of course, arrear payments to companies by the Egyptian authorities. So even with June's forthcoming payment of about $750 million, there's another 2.7 odd billion that is still pending. Will these arrears be cleared this year?
Well, Marama, you're talking obviously about the oil companies, oil foreign companies, and yes, the central bank governor said that Egypt has the facilities or the money to pay back all the deals, but it will not do so. There's an agreement with these companies to reschedule or to pay the remaining amount in 2 years. So there's still another year to continue that, and basically because Egypt has a lot of debt, foreign debt to repay. Yes, the foreign reserves are up to $27 billion, like you said, but there's the Paris Club. Egypt owes around $3 billion yet to be paid. There's Qatar, there's United Arab Emirates, there's Turkey, there's Libya, and obviously the latest IMF loan, but that's still up to be paid later. But at least those need to be repaid soon, and there's a schedule for each. So if you add them up, it is a significant number. So there is still some time to be paid for the foreign oil companies and the other debt as well, because Egypt's debt has been increasing, the foreign debt and the public debt, in the last 2 years at significant numbers.
Indeed. And speaking of debt, it's interesting you raise that because it segues neatly into my next question. Egypt's coming back to global markets next week with another Eurobond, looking to raise anywhere between $1.5 to $2 billion. January's issuance was a runaway success. Does the Treasury and the central bank expect the same thing to happen this time around?
Yes, the Minister of Finance looks optimistic, and he has some argument there, because since the pound has been devaluated and Egypt received the IMF loan, there has been marked improvement and numbers that show that Egypt is less risky than before. S&P and Moody's have raised Egypt's level ratings to B from B- when Egypt issued the first bond last January. So the situation is better. The market, the international market, is still looking at emerging markets like Egypt as attractive. They're still looking for yields, new yields to jump into. So the market wants these bonds at the moment, is ready to buy into it. When Egypt issued the bonds and received $4 billion, there were $13.5 billion in offers for these bonds. So all the signs say that it will be as good as before, if not better.
Indeed. One last question for you, Yasser. I'm not sure how exactly the Eurobonds are being priced, but let's talk about credit risk here. The Federal Reserve in the United States planning to essentially raise rates progressively throughout the course of the year. What's the CBE's and the Finance Ministry's assessment of credit risk, credit pricing risk, especially on these Eurobonds, or has that already been priced in to market expectations?
That has been priced in, and what the minister's been telling us is that actually the first bonds, Eurobonds that were last January, they were supposed to be $6 billion, and the government decided to take $4 billion on it, and the next $2 billion are actually the ones we're talking about now, is actually another portion of the first deal. So it's like they have transformed it and divided it into two separate deals, but with the same risk, with the same calculation, and with the same deal, with the same conditions. So concerning the government, they see it as one deal, but just divided into two, and has priced in everything, as you said a moment ago.
Indeed. We'll leave it there for the time being. Thank you for that. Let's see how the Eurobonds perform in the market next week. That's Yasser Kim, of course, live in Cairo.